And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast with Massar and Tim Stenovec. Alix Steel taking a well-deserved day off. Welcome to our audiences across all of our Bloomberg platforms. A pretty big sell-off going on right now, Carol, in the S&P and the NASDAQ dragged down by big tech.
Yeah, absolutely. Like across the board. I just heard you talking on the TV side of things, Romaine, about NVIDIA and having its worst day in several years. I was looking at NVIDIA from March 25th when we saw that high on that name to today. We are down just shy of 20%. So very much a different rethink, at least in today's trade, when it comes to NVIDIA and really over the last couple of weeks here.
Well, earlier in our program, Abigail Doolittle was on.
Sorry,
yes,
just to Carol's point, too, because I was actually looking at that, too. And then you go back to that, March, at least with the NASDAQ 100, you go back to that March high, that March 22nd high. And I was going through the numbers here. I mean, we're down like 7% or something from that, which is just insane, given that we're only up like 9%. And I think we might have to recalibrate that given the selling into the close.
I'm calling it the reset week. I really feel like the tone is changing a little bit.
But is this a reset? I mean, you're talking about erasing like almost all the gains for the year. That's worse than a reset.
I mean, Dennis Gartman was on earlier today with Abigail Doolittle. And he said...
Abigail Doolittle.
Yeah, for Options Insight. And he said... The bear market is just beginning. This is a bear market that's been long overdue, he says. And he's, he's bearish right now.
So he sees a bit of a regime change here in the markets. But, I mean, let's also not forget that we have a couple of things going on, right? Fears of Middle East retaliation over the weekend. There's no economic data today. And there's a lot of nervousness before the Mag 7 start reporting their earnings next week. So you combine that all together, why be long?
Yeah, well, I mean, well said there. And let's take a look through the numbers here, and we'll start with the green on the screen. That belongs to the Dow Jones Industrial Average, which is higher on the day by about 200 points, or about 0.6% here on the day. It takes a while for these numbers to settle, but one tick up or down is going to be the difference between whether the Dow finishes the week in the green or in the red, basically flat on the week. The S&P 500 definitively down on the week and on the day, a 0.9% drop, a close below 5,000, lower by more than 3% on the week. The NASDAQ composite lower by more than 300 points, 2% on the day, about 5.5% on the week. And let's check in on the Russell 2000. Another down week for the Russell, but a relatively bright day, a gain of 0.2%.
All right, you mentioned the S&P 500. We're down, 3 weeks in a row here, Romaine. So this is the longest streak that we've seen going all the way back to October of 2022. About mid-October. Having said that, if you go into the S&P 500, Scarlett, I know you're going to do the industry groups. You've got still 335 names to the upside, actually gaining ground in today's session, 166 to the downside.
Yeah, and that's a really good point because you see that reflected in the IMAP as well. It looks like a pretty mixed picture, albeit the biggest sectors are leading the declines, and that is, of course, technology, losing 3.1%. Of course, that's NVIDIA. Communication services losing 2%. That's Netflix, although Paramount has offset a lot of that. Consumer discretionary losing more than 1%. Outperformers include utilities, traditional safe haven, financials, and energy. And of course, energy moving higher as oil prices rise.
All right, let's go to some of the individual gainers. And it just shows investors do react to fundamental news or deal news in the case of Paramount, which is the #1 gainer in the S&P 500, folks. It's up more than 13% in today's session. Apollo Global Management and Sony Group are said to be considering a joint offer for the media company. We know that Paramount, the parent of CBS, MTV, other networks, holding exclusive talks with Skydance Media, also about a deal. So there's a lot going on, but Paramount certainly a standout in today's session. All right, earnings news. Yep, moving this name. American Express up more than 6%, #2 gainer in the S&P 500. This as Amex reported revenue that topped estimates in the first 3 months of the year. Consumers continuing to flock to the company's premium credit card offerings. The number 3 gainer, in the S&P 500 is Fifth Third. It was up just about 6% in today's session. The lender reported first quarter net interest income that was ahead of consensus, and analysts described its overall report as being solid. And this one, Romaine, is for you. Trump Media and Technology Group, its shares actually rising for a third day of gains, up another just shy of 10% after about a 26% gain yesterday. Wow. Yeah, we've had a week.
So the rise today, can we also blame that on the short sellers? Or, no?
Well, there's probably a lot to go around.
Tim, you got some decliners?
Yeah. No shortage of decliners
I wasn't
here.
done, but I will pass the baton
Carol,
to my beloved colleague.
The NASDAQ 100, look, we just got to say, dropping 2.1%. Worst day since October for the NASDAQ 100. I want to start with NVIDIA.
And can I just say, sorry to interrupt again, but on the NASDAQ 100, so I was going through the numbers. We're up 9% to start the quarter, so basically to start the year to that record high. Now the NASDAQ sitting on a 1.2% gain for the year.
So what is it, Romaine? Is it geopolitics? Is it rates moving higher?
Well, I think it was a combination of rates and then the fact that, well, you got this bloom coming off the rose of that AI chip trade.
Well, let's talk about that because NVIDIA shares stumbling 10% today, having their worst day going all the way back to March of 2020. That's when they fell more than 18% in a single day, closing below its 50-day moving average for the first time since November. Not just NVIDIA. Shares of Meta Platforms closing down 4%, Amazon 2.5%, Microsoft falling 1.2%, Apple falling 1.2% as well. I do want to also talk about Super Microcomputer because it did have its biggest decline since August, really dragging on the S&P 500 today and dragging down other AI stocks too, which I just mentioned. Intraday, it was the biggest drop going back to March of 2020. Shares now trading at their lowest level since February 8th. The company,
Can I just say
here's
it's up
why.
151%?
Not yet. You can't say that yet. I'm going to talk about why it went down. Because it announced this morning that earnings are coming out on April 30th. And last time it came out with its earnings date, it pre-announced numbers that exceeded Wall Street estimates. It didn't do that today. So that has investors on edge. Sorry, Carol, how much is it up this year?
151%. I mean, sometimes things go a little far too fast, and so maybe
the pendulum swings too far. Are you saying?
Yeah.
Wait, I'm sorry, Tim. Explain that again. So it's because they didn't move the earnings date?
They didn't. They came out with their earnings date, but they didn't pre-announce better than expected numbers.
So they did last time,
right?
And people are disappointed it didn't happen again.
Exactly.
Oh,
yeah.
okay.
So. Okay. I do want to also just end with honorable mention Netflix. Despite a quarter that did blow past estimates, it beat on subscribers, beat on the top line, beat on the bottom line. Forecast for revenue was a little weak. And then this was the big one. We talked about this yesterday. Not reporting subscriber numbers starting in 2025. So one more metric that's very important to analysts and investors, that is gone for Netflix.
What will options traders do without that subscription number?
Let's take a quick look at what happened in the yield space. Well, it was a kind of a subdued day here. We did actually see a drop in yields. Modest buying that came in, or I should say actually a lot of buying came in overnight here as that safety trade really sort of flared up. But then it kind of died down. You're still seeing yields lower on the day, but we should point out the sell-off in treasuries did continue on a weekly basis. Fourth straight week right now. We're up on a weekly basis on the 2-year yield by about 8 basis points and about 10 basis points right now on that 10-year yield. And guys, a lot of people have been talking about this. I mean, you were asking earlier, Tim, whether the sell-off was because of what we're seeing with AI or what we're seeing with some of these other things. But of course, the rate story really fits into that as well here. And a lot of people now looking at that 10-year and a 4.7 threshold that could trigger more selling.
Yeah, absolutely. All right. So kind of interesting. And we've got a couple of waits before we wait for that next FOMC meeting in terms of maybe even more clarity in terms of what's to come. But a couple of stories, Tim, that caught our attention has to do with kind of money and wealthy people.
Yeah. So I love this story by our own Alora Nimus, who talked a little bit about the different way that very wealthy people and people who earn high incomes are, I don't want to say working the system, but making sure that they're not spending too much time in New York and California so they don't get charged income tax on being in those places.
Yeah, because if you're in New York or California too much, then New York treats you as a full-time resident, and then they'll tax you as one. So people are taking off and making sure that they leave New York State at a certain time, and they're watching their hours and their days. There's even an app to help you keep track of this, which is pretty incredible. It's kind of become an obsession because the auditors for each of the states are very, very aggressive in trying to determine whether someone was in New York, even just to stop and get gas or get something to eat, and they'll count that as you were in New York for that day, and therefore for these number of days over the year you were in New York.
Okay, first of all, Tim, you were being way too diplomatic there. And second of all, this story was fascinating because, everyone knows this has been the parlor game for a while. Basically, 51% of your time basically needs to be in Florida or whatever low tax haven that you're in, and then the other 49, you can do whatever. But to see just how detailed they are, particularly with these flights and the driving times and the apps and stuff, I guess, look, if this is about saving, several $1 million in taxes, sure, why not?
It's all about where you keep your teddy bear.
It's the teddy bear test.
Yeah.
Exactly.
Or where your dog is. In,
Peloton.
Yep. Oh, that's right. There was a good example of that one.
Your teddy bear and your pillow.
So
Peloton,
you gotta have a
which
Peloton.
Florida.
There's a
every
question here. So where do you spend most of your time, Tim? I mean, you're California.
At this office.
That was a
You know
quick
you get
answer.
taxed more for that, by the way, right?
Yeah, I do.
All right, everybody, that's a wrap. Our cross-platform. Have a great weekend. Our cross-platform, radio, TV, YouTube, Bloomberg Originals. We call it Beyond the Bell. We'll see the gang on Monday.